Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, July 11th, just after the close. I don't want to overplay a quiet week, and that's what it was. It was a summer doldrums week, but there was a little bit of activity under the hood. In our US ETF, we felt some of that pressure in the cybersecurity stocks, in the cloud software stocks. Some of those names got banged around pretty good this week to the tune of down 3.5%, 4%. But that's on the back of a torrid rip higher over the last 3 months. So as this always presents itself, is it just a pullback off of that move, or is there a bit of a reversal? We'll see over the next couple of weeks. We did use some of this weakness to add a software name over in Tactical Trend, and that's APP, AppLovin. Very interesting company, explosive growth. It does have its detractors. Not everyone out there believes the growth is as genuine or legitimate as is stated. But some people I have an awful lot of respect for in the IA world feel that this company and their CEO will be heard from for a number of years. So we took a little starter position there. In terms of what we're looking at, broadly speaking, again, S&P off fractionally this week, NASDAQ off, let's call it 1.5%. Whenever that happens, you look to see what did work. And really the only things working this week were energy and utilities. So that tells you there was a little defensive bent to the market. If you go back to last Friday, I did mention some of our short-term indicators, mostly option related, were starting to show extremes in exuberance, extremes in FOMO, fear of missing out. So just a little reset there this week. Now, next week wouldn't be a problem to continue to grind and give up some of that rip. Just resettle in terms of a level. So that remains to be seen. If utilities, if consumer staples start to get a bid, those defensive areas, then we'd have to be a little more on our toes on our growth names. But so far, solid beginning to July, off a solid Q2 and a solid year to date. So we're going to go to the moose. There was a little pressure higher in rates, right within that range that he's been discussing all year. 10-year, about a 440, smack dab between that 4 and 475. But of course, the moose is sunning himself up in Newport. John, take it away.
Hi, it's John Musso. I'm the Chief Investment Officer at Cumberland Advisors. It is Friday afternoon on July 11th. The Moose has the day off. We are in Newport, Rhode Island at the Newport Open, which is being held at the International Tennis Hall of Fame. Urge you all to come see it at some point. It's a great spot. They've just redone the Hall of Fame, so if you're a tennis fan, it is terrific and must watch. This week in bonds, quiet fade is the way we would describe it. Treasury yields up about 8 basis points to a 442 or so on the 10-year Treasury. 30 years are up to about a 496, same thing. Muni's very quiet. In fact, really little change on the long end and yields down on the shorter end. The Muni story continues to be repair from the high yields. We particularly think the long end of the Muni market is very attractive, where a lot of deals are being priced at 5% yields. When you do the taxable equivalent on that, that is almost an 8%. That is an 8% taxable equivalent, and clearly higher if you start factoring in state income taxes. We don't expect that to be around a long time. It has been over 10 years since the long end has been this cheap relative to the rest of the market. And it isn't one of these one-off deals like happened in April or, for example, October of 23, when you did get those 5% levels, but they were tended to be short-lived. This has been a little longer. We think it's somewhat opportunistic. Next week, we'll have the CPI numbers. Those will be telling. And we're telling because of what happened this week. Why were yields higher this week on treasuries? Because of the tariff talk. We're back with the tariff volatility that we've had whether the president's serious or not, or whether this is just another, hey, we're going to throw this out there and then reel it back in. We know that's what happened in April. We don't know what happens this time. So it will be important to watch. In any case, it's important to realize that if you do get any really inflation out of tariffs, they tend to be one-shot things, and our overall viewpoint is that the economy is still slowing down gradually.
Thank you so much, Moose. Hope you enjoyed your semi-day off because you still checked in with us, and we appreciate that. See you next week.